Welcome to another edition of BCR Webcasting. I'm very happy today to be joined by Camila Muñoz. Camila is the CEO and founder of Exponential Confirming and is going to be a speaker at our forthcoming 11th Supply Chain Finance Summit, which will take place on the 29th and 30th of January in Madrid. Camila, welcome. Camila, you're going to be speaking on a panel which is about assessing the growing demand of the mid-cap sector and talking about the differences in managing blue chips and mid-caps. So the mid-cap sector is something we've been talking about for some years now. It only seems to be comparatively recently that the mid-caps are coming in or are being targeted by supply chain finance companies and banks. So I'm interested as to why that is, and I'm wondering if part of that is anything to do with deglobalization. So let's start by asking you about deglobalization and the sort of impact that has had on supply chain finance offerings, and what sort of adjustments, if any, have been required to align with these deglobalization shifts.
Mm-hmm. Well, Michael, thank you for inviting me to your space, and I'm very happy to be here and be able to share what my insights are on this business. I've been around for quite a few years now. I'm very much focused on impacting companies in Latin America, North and South of Latin America. But we have also worked with some importers and exporters around the world. So this is quite interesting what you're saying, because deglobalization is definitely happening and we're seeing impact on supply chain finance. So I think we've had to adjust some of the key or maybe specifics of the products we were offering. And I think one of the trends we're seeing is probably people using platforms more every time. After the pandemic, these services have, I think, boomed within the companies we see around. However, we see more and more people just buying nearby. And I think that has an impact on our systems. Um, and I think volumes have changed also because we are seeing more and more usage of this kind of products since we have or we are able to contact all the players within the business. So I think there are more localized, more regionalized, more productive, and more or significant changes in those supply chains. And we are seeing people buying nearby,
Hmm.
which is a very big difference.
So there's a direct connection between deglobalization and demand for supply chain finance. You've seen that demand increasing quite significantly.
I think we have, yes. Our region was not very developed in this business a couple years before. So I think companies are seeing the benefits of using these kind of services for impacting their chains and making them more competitive and probably impacting in terms of sustainability as well, since they can deliver much better prices with deals that are negotiated for a full supply chain.
And that's across mid-caps and large blue chip
Exactly.
corporates.
And more mid-caps are being included here. And technology has been, I think, absolutely important and decisive since it's the same thing to service a small cap as it is to service a blue chip.
Well, I was going to ask you actually about the differences between servicing mid-caps and blue chip corporates. I mean, what are those differences? What are the needs of mid-caps compared to blue chips in terms of providing SCF services?
Hmm. I think we think that blue chip companies tend to seek like larger solutions and more tailored solutions. And that's, I think it's obviously something that had to happen. These are supply chains that are larger than the mid caps. So we use technology to deliver a perfectly tailored product to them. And that's pretty much the difference. The bigger the program, or the larger the program, the best technology we can offer. However, small cap or mid cap businesses can also benefit from technology since it can be tailored at some point for them.
Mm,
However, the challenges are differences. We need to be able to offer larger companies more scalable solutions, higher degrees of automation. We need to be able to secure their transactions, evaluate the risk as well. But for mid-sized companies, our biggest challenge is to be able to grow their programs and to be able to access their supply chains and actually have them join the programs, which is a little bit harder because these companies were not really included in the programs before. So the product is not very well known.
mm. So there's an element of education that has to be done in terms of the suppliers.
Definitely. I think definitely that's one of the key elements we need to work on in the coming years, and to be able to include more SMEs in the programs as well.
Mm.
Hmm.
Do you encounter any resistance from the SMEs, from SME suppliers?
I think SMEs still think that accessing these kind of programs is going to show weakness or financial distress. But that has to be a process. We're seeing in our region is moving rapidly. We're seeing penetrations on volumes higher or faster than the years before. So it is happening. The change is happening. However, we're not there yet. We're not there yet. Hmm.
But if we're looking at buyer-centric programs, then these structures are initiated by the buyer and presented to the suppliers, aren't they? So why would the suppliers be concerned about being seen as it being seen as a sign of weakness?
I actually think when the programs are presented by the buyers, it's easier. It's an easier task.
Mm,
But they still think that giving or offering a discount is a sign of weakness. And they still think that when they're being evaluated by the banks, there might be some kind of sign that they are not managing their cash flows correctly. Uh, but that's something we all know it's not true. We all know it's probably the opposite. So we're having to educate around and give these companies some insight on the benefits that we can deliver through the usage of these kind of products.
You mentioned managing risk. So again, when you compare large blue chip corporates with mid caps, of course the risk situation is not the same, and presumably you're managing greater risk with mid caps than you are with large blue chip corporates. So how do you how do you manage that risk? What about the prospect of insurance wraps for mid caps?
Yeah, that's a very good question because in this part of the world, insurance is not very well developed for supply chain finance and is not very understood, and it is not very understanding of the situation of the factoring business. So we don't have very reliable, fast, or tailored solutions for insurance. Uh, we're trying to get there, but up to now, we rely 100% on the risk assessments and the credit analysis that we can do and the technology we can add to that. So basically, it keeps being riskier to buy an invoice or finance a program for small companies or mid-cap companies than it is to finance something for blue chips. And what happens with that is we are very much concentrated on large companies and not the small ones, which are the ones that could benefit largely from these programs since they don't have access to that much financing alternatives. So we are trying to get there. Insurance companies are looking for our region, but we're not there yet. We still need to work on that.
Okay. So in terms of uh, managing the risk, well, let's talk about pricing. So presumably increased risk with mid caps compared to blue chips. That's reflected in pricing to some extent.
It does reflect in pricing since we have to rely on the credit analysis and the credit assessment. So it does impact. We have no mitigator with insurance whatsoever,
Mm,
so it does impact, and we have a huge gap there because we know we've seen what happens in Europe in countries where the product is more developed, and we need to bring it here. There's a huge opportunity, and the gap is very big. So I think we would benefit a lot from that.
and what exactly are mid caps looking for in terms of a supply chain finance structure or service?
Mhm.
And you know, has any of those aspects changed since COVID-19?
Mhm.
Um, I mean, for example, has there been an increased focus on inventory financing?
Mid caps are realizing that these kind of products are tailored or work for them as well. They are starting to talk about sustainability. They're trying to develop or impact their own supply chain, which is something that seems to be basic, but it wasn't like that before COVID, before the pandemic. These mid companies were working with just, supply chains that were not very put together or were not created um, strategically, I would say. So I think right now they're worrying about their financing sources and they're putting in place supply chain finance programs that bring not only automation, but also financing with purchase orders, probably in some cases. And we're seeing some sectors impacting their supply chains down to the lower part of the pyramid,
Mm,
which is something that is transforming the business and the way they see their supply chains. They're able to evaluate and see what happens with their suppliers on a deeper base, I believe. Mm.
And are you providing pre-shipment finance? Is that part
Yes,
of your
we
offerings?
we provide pre-shipment finance in some cases, not
Mm,
in all sectors. And actually, it does work, and these companies value this kind of service.
mm.
And mo in most cases, we see recurring payments and recurring orders. So th those are very easy in terms of risk assessment to analyze. Mhm.
Because in pre-shipment financing, of course, the risk is generally seen as much higher. Um,
Yeah, it is much higher, but when you put in place a system that can actually analyze the relationship in terms of how old it is, how much product or how mature the relationship is,
Mm,
And I believe that this when we talk about risk assessment and credit analysis, we need to include questions that are not only in terms of numbers and financial analysis. We need to ask these companies about their history and and their experience in terms of the services or products they're delivering and how well the relationships are with their clients.
mm.
So it becomes a bit easier in terms of risk to be
Is,
able to finance
is that one
pre-orders.
of Exponential's key strengths, would you say?
It is one of them. It
Yeah.
is one of them.
Okay. Um, and what about the current economic uh, climate? Has there any been, is there any specific needs that have arisen as a result of what's going on now? Um, in terms of, there's a lot of geopolitical stuff going on at the moment. Um, how has that impacted
hmm
your clients?
hmm Um, those needs, I think we have one purpose that that pretty much defines what we do on a daily basis. And we are obsessed with being able to deliver these services to SMEs because we think that when SMEs get more competitive and can access global markets, the countries itself themselves become more competitive. And we end up being able to impact the entire economic environment of a region. So we want to include small suppliers in supply chain finance programs, and we want them to see that in some cases they can also create a program for their own suppliers. So that's one of that has a lot of barriers, um, because they have credit history is limited, and they don't necessarily are big or have big volumes, but still is that's one of our key issues to work on. Um, we also want to create hybrid supply chain finance solutions because there's a bit of a confusion between what factoring is and what confirming is. Uh, and we all know it's finally the same thing. We're talking about the same service in the end, but and these two can be integrated in just one single program. I can work on my receivables, but I can also work on my payables within the same
Right.
platform and integrate all the both services.
Mm,
And my company can benefit from a better credit analysis position, so I can receive a better service. Um, Also, we want to include or be able to bring in what we call seasonal cycle companies or seasonal cycle businesses,
mm,
where volumes are not consistent throughout the year, but they're also interesting when we understand the cycle and we can deliver somehow tailored solutions for them.
mm.
Mm, we are ourselves.
Is it something which has been missing in the sector? Uh,
Yeah, I think it has been missing in the sector because of the lack of understanding that the cycle is in place and it is okay not to have the same volumes for the full year. Um, so I think there's an opportunity there.
they're
We've seen
meeting
it,
a significant demand
right.
for that offering. Okay.
And be able to give them larger larger volumes when they need it or larger.
Ability.
I can't find the word for that. Like we, these companies
Lines.
needed flexible lines.
Mm,
We cannot offer them a line that is big off season or large off season because we might end up increasing the risk.
mm.
So we
And
need
are you
to.
managing that through technology?
Yeah, we're
the
trying to do that
variation.
through technology,
Yeah.
and we're trying to work that out by creating history with our clients as well and getting to
Right.
know them better, which I think is something that always pays off well. Mhm.
It's all very, very interesting, Camilla. And, I'm really looking forward to hearing uh, more from you and your fellow panelists at the end of January in Madrid. But thank you very much for joining us today. And just to remind everybody, Camilla will be back and speaking in Madrid at BCR's 11th Supply Chain Finance Summit, which will be on the 29th and 30th of January in Madrid. Camilla, thank you once again for your time today.
Thank you, Michael, and we will see everyone in Madrid. I have been present in that reunion a couple of years,
Mm,
and it's very interesting.
yeah,
The topics that we can discuss are definitely creating a trend in the business, and everyone's invited.
yeah, we'll
Mhm.
look forward to it. Thank you.
Thank you.